Hello and welcome to South Asia Chat, a podcast series brought to you by the Institute of South Asian Studies at the National University of Singapore. I'm your host, Nithya Subramanian, an editor at the Institute. The Finance Minister of India, Mrs. Nirmala Sitharaman, recently announced the National Monetisation Pipeline designed to unlock the value of investments in brownfield public sector assets by tapping institutional and long-term capital. Through this, government-owned roads, railways, power plants, gas pipelines, airports, ports, warehouses, etc. could be leased out for a specific period to non-government entities and enable it to raise rupees 6 lakh crore. To tell us more on this pipeline, we have with us today Dr. Anantha Nageswaran, a non-resident senior fellow at ISAS. Dr. Nageswaran is also a distinguished visiting professor of economics, Kriya University, India, co-founder of Takshila Institution, and a part-time member of the Prime Minister's Economic Advisory Council. Thank you for joining us today, Dr. Nageswaran.
You're welcome. I just wanted to clarify that although I'm a member of the Economic Advisory Council to the Prime Minister of India, I am speaking to you here in my personal capacity. Thank you.
So I will start by asking you to share with us some background on the national monetization policy and why did the government decide to announce it? To what extent do you think it will help to shore up the economy?
Well, I mean, there are many parts to your question. So the background is clearly the government's long-term infrastructure expenditure plan, which pegs the number based on current prices and estimates at 110 trillion rupees. That's roughly about $1.5 trillion at current exchange rates. And so given the estimated requirement of India's infrastructure expenditure, the government decided that the best way to find the money, and there are many ways to find the money to do so, one of them is to sort of make sure that the existing assets are well utilized and the revenue or the amounts unlocked on those investments could be plowed back into fresh investments. So the National Monetization Pipeline would fund somewhere between 4 to 5% of this long-term infrastructure investment requirement for India. That's the background.
It is the NMP has also been envisaged to serve as a medium-term roadmap that is linked with the National Infrastructure Pipeline. What are some of the likely challenges for the government in implementing these, and how can these be overcome?
Yeah, sure. I mean, the first thing you also asked me about what kind of impact this would have on economic growth. So clearly, this is not a short-term initiative. The fallout of this initiative, if it succeeds well, is definitely going to boost the medium-term growth prospects of the economy. After all, infrastructure is a binding constraint on the maximum sustainable growth rate that an economy could achieve. So clearly, its impact on the medium-term growth prospects of the economy is undisputed. It would definitely elevate the growth prospect. Now, coming to what would it take? Clearly, the private sector would have to have investable surplus, and the private sector should be able to estimate that it is in a position to derive more value out of these assets. That is when they would bid for these assets, whether through revenue sharing or rentals or outright purchase in some cases, and mostly leasing. So outright purchase is ruled out. I think that I'm probably wrong in saying that. So it's mostly through cash flow sharing, rentals and leasing and so on, or revenue sharing and leasing and so on. So bulk of the success would depend on whether the private sector feels optimistic enough about the growth prospects and their ability to extract value out of these assets. That would determine to a large extent on the private sector is willing to bid for these assets.
You know, we are all aware that the Indian economy, and in fact, economies around the world are reviving from the COVID-19 pandemic. And you just spoke about the private sector interest levels. What is your assessment? I mean, how do you think they have so far reacted to this new measure, this new policy? And do you think the government needs to do more to attract private sector investment?
So these are early days for us to gauge the interest of the private sector, because the specific assets are housed under different ministries, and each ministry has to come up with a plan for each specific asset, and the terms and conditions of those assets must be made available, and therefore the response of the private sector would depend on the on an asset by asset basis. Obviously, right now, everybody has extended a cautious, warm welcome to these proposals because the underlying logic is sound. Let the government monetize existing, as you put it, brownfield assets so that greenfield investments can be made. That's the clear part. Is the government doing enough to support the private sector? Well, quite a bit, in fact. In 2019 September, the government actually lowered the corporate taxes on the private corporate sector. So Indian private sector, or rather Indian corporate income tax rates, are probably one of the most reasonable ones in the world. And second, very recently, the government also ended the uncertainty with respect to the retrospective taxation, something that's been hanging fire for nearly 8-9 years. The third thing, and that happened recently, a couple of days ago, the announcement of a wide-ranging package for the telecom sector, helping them with the current situation on cash flows, on payment of their dues to the government, and also for the number of years for which the future spectrum license could be held by them, etc. So by and large, and I think, and late last evening or day before, the finance minister announced a government guarantee for an institution that would buy up the non-performing assets in the banking system. So clearly, I must say that the government has been in an overdrive with respect to helping the private corporate sector, and their profitability has also been doing very, very well in the last 1.5 years through the COVID. So clearly, the private sector should have the risk appetite. Given government's clear signals of its own policy support to the private sector, they should have the appetite to bid for specific assets and extract better value out of them, and then be able to support the government's greenfield infrastructure investment plans.
We also, there's also a lot of talk about putting in place a regulatory framework. I mean, this is considered to be an important aspect to make the NMP a success. How do you think the government can speed this up to ensure that the interests of both the customers and the corporates are protected? Sure.
I think in some sectors, the regulatory mechanism already exists, and they are not exactly, and some of these ministries like the railways and especially road sector and power, it is not as though they are new to the monetization. So, I mean, highway projects have already been monetized, in some cases quite successfully, in some cases with mixed results and so on. So clearly the regulatory mechanism has to be there, and the sooner the better, because that would lend certain predictability to the rules governing the brownfield asset monetization. And second, it will also ensure that there is a certain grievance redressal mechanism for the private sector bidders. And to the extent that the regulator is seen as a independent, objective, and credible body, it will also enhance the trust and confidence in the bidding and negotiating process. And here, I think there is much to be done, both from the government point of view and also by the private sector, because in the past, not so much in the asset monetization pipeline, but also in many other public-private partnerships, usually what has also happened is that the private sector sometimes either overbids in order to get the mandate, and then attempts to renegotiate the terms of the deal, in which case, ideally speaking, it should be thrown open to everybody again. Or in some cases where there is a government is spending money, the private sector usually underbids, in the sense that it provides the lowest possible quote where government's expenditure is involved, and then subsequently they want to renegotiate the terms, whether it is in selling power to the government, etc. So private sector does the act in both ways, sometimes over projecting the revenues, overbidding, and then struggling with rising its own cash flows, and then going to the government for reconsideration. and vice versa when it comes to government bidding for the private sector services. So that is also something that the private sector should learn from its own past experience, not just the government. And that is what would make this program a success. Both sides have plenty of experiences, good and bad ones, to learn from, and to apply those learnings to the current monetization agenda.
I would also like to know your thoughts on how successful this monetization pipeline program would be, because we heard in the beginning of this year when the government announced its budget, grand divestment plan, and we also spoke about it in our earlier podcast. But it's now been almost 6 months since that announcement, and there hasn't been much progress. We haven't heard too much happening on that front. So how do you think the government is going to make the divestment plan a success on one hand, and then the NMP on the other hand? And both are, of course, essential to shore up the economy.
Well, they're essential, but not necessarily something that needs to happen forthwith to support the government. Because, first of all, in the first 4 months of the year for which we have data, the financial year, April through July, the government of India's fiscal numbers are far better than anybody would have anticipated. So that is something to keep in mind. And second, the estimates that the government had put out for the disinvestment receipts are quite realistic. And all you need to see 1 or 2 or 3 maximum big ticket items to happen for the government's revenue targets from disinvestment to be realized. Air India, LIC, Bharat Petroleum, etc. That should take care. So I wouldn't be somewhat pessimistic about the prospects for the government realizing the disinvestment receipts in the current financial year, 21-22. But at the same time, the National Monetization Pipeline also is a multi-year project. It is not just for the current financial year. And the fact that this plan has been put together in consultation with multiple ministries, and when the announcement was made, secretaries of the various ministries were present, etc., are also important, not just from the optics point of view, but also for the buy-in. So I get the sense that much preparatory work has gone behind the scenes in order to make sure that no last-minute objections are raised by the respective parent ministries. And so, of course, as we all know, bulk of the assets has to come from railways and road ministries. So, therefore, I'm hopeful that the success of this program has reasonable prospects. Ultimately, whether the number 6 trillion is realized or if it is somewhat below or above that would depend on the realism of the pricing. And that is where much of the learning from the past has to happen.
Finally, there was some opposition from the political parties like the Congress, which obviously spoke about this whole NMP as a move to try and sell some of the crown jewels and create private sector monopolies. What are your thoughts on this criticism?
Well, I think misinformation is not just the monopoly of any single political party, not just in India, but anywhere in the world. And this is no exception. Clearly, this is not about privatization. It's about leasing assets. And also revenue sharing or rentals or upfront lease payments, etc. So clearly there is no privatization. There is no transfer of ownership involved here. So that complaint therefore can be dismissed. Obviously, there will be some legitimate concerns about who gets to exploit the assets and deliver returns to themselves and to the government. And there, I think possibilities of favoritism, etc., do exist. But clearly, that is where, as you correctly asked earlier, the importance of appointing regulators, competent ones, arm's length, objective criteria for the bidding process, transparency, all those things will go a long way to allay concerns of favoritism, abuse and misuse of government money, etc. And more importantly, we should remember that the idea of monetization is has not just been the preserve of the government alone. It has been shared by previous governments. It has been shared by experts who advise both sides of the aisle, so to speak. So clearly, it is something that all political parties are aware that they have to do, given the pandemic-induced expenditure. So it is. I don't think anybody would have done differently. Ultimately, the proof of the pudding has to be in the eating, and that boils down to the manner of execution and the transparency of pricing and the avoidance of renegotiations and the realism behind the revenue as projections, assumptions, etc., that would ensure that the program becomes a success.
Thank you so much, Dr. Nageswaran, for joining us today and sharing your perspectives on the National Monetization Pipeline. Of course, it's interesting times ahead, and we hope to have you again sometime soon.
Thank you.
You were listening to South Asia Chat. To learn more about our work, visit us at isas.nus.edu.sg. Also follow us on Facebook, Twitter, and LinkedIn. Thank you.